Alright everyone, here we are with ticker symbol SNDL, Sundial Growers Inc. And before we jump into this chart, I want to say welcome to all the first time viewers and investors. Welcome to the channel, Invest for Tomorrow. To all the subscribers, welcome back. And as we jump into this chart, I just want to quickly announce that I have a Twitter account now. You could follow me on the Twitter. The link is in the description down below. And stay tuned till the end of this video for a new ticker symbol to add to your watch list. We've talked about WBA in previous videos. We talked about ALGM. Today I have a new one you won't want to miss, so stay tuned for that till the end of this video. So SNDL has had some sideways movement and then a dip, right? It kind of fell, kind of hung out sideways. It looked like a little consolidation and then it dipped. It was trying to hold itself up. The bulls definitely lost control here and the bears tore through the 50-day moving average. Now they're reappearing here. A lot of bulls are probably saying this is an opportunity to buy, so that's holding up the stock pretty well. Now, the orders are pretty big here. That's why it pulled up. But on the way down, there's a lot of them that can cancel out that slight bullish momentum. Now, we need to watch it carefully tomorrow morning, how this is doing. And now we have to talk about some numbers in the broader spectrum of things. So some important things are going to be discussed here moving forward. So let's see our new support here and our new resistance based off the chart. And we want to pay close attention to the broader spectrum of numbers as well, because this is a very narrow stretch here. This is just going to give us an indication of how quickly this is moving downwards or upwards. Now the volatility can break through both of them, up and down, right, and go more to one side than the other, but we need to see these numbers a little bit broader to definitely know what is going on moving forward. So here we are with the 50-day moving average. It's literally 70 cents. To be exact, it's 70.02. I mean, to the thousandths place. So just to round it down and get it right there to the point, 70 cents is our 50-day moving average. Super important number to keep in mind. As long as we're below it, we're in bearish territory. We're currently sitting at 67 cents, so we're below it. And the moment we're above it, we're in bullish territory. So we're going to talk about this resistance and support here. But the most important resistance level above the 50-day moving average, just to round it down, because once again, it's 72.02, is 72 cents. That needs to be broken through. And then the next point would be up here at 76. And then the highs here of 78. That's where the rejection has happened. A lot of people are seeing this one get closer to $1. We're going to see what happens, how this continues to play out. But right now, it's being pulled down definitely by the bears. A lot of profit taking, uncertainty that this hit this high and it started to fall. And then today it dipped even more. So there's a lot more bearish activity than the bulls have been able to handle to keep the momentum going, right? The bears have been pulling it down. So keep in mind these points of reference here, 76, 78 cents, and down here at 72. And the 50-day moving average is 70 cents. Now, we're going to talk about this support, and our support is 64.97. If it gets broken through, the lowest point reached in the day is down here at 64.23, 64.18, give or take, right? So keep that in mind. This point of reference here, super important, but it's still here in the 64-cent range. So I don't feel like that's a good support level to say, okay, this is holding itself up, or oh, this is going much further down. It's such a close call, right? So the next support level would actually be down here at 59 cents. That's a little bit broader, and if you want to round that up, because it's 59.92, you can round it up to 60 cents. And then you also have down here at 62 cents, rounded up to 63, to kind of dissect this chart and see how much further the bears are really pulling this down, or are the bulls trying to reappear. But before getting to any of those numbers, the first support level here is 64.97. As I always like to do, you can round that up to 65 cents. And watch that very carefully, how it's reacting between that point and down here at 64.24, 64.23, 64.18, give or take, because to the hundreds and thousands place, it's definitely a lot more narrower. But This is the lower end of 64 cents. This is the higher end. So I would just look at this as 65. This is 64 to round it down. Watch that carefully. And then you have your other points of reference down here at 62. And then down here at the 59-cent range. Right here at this point, almost 60 cents. All these points are very important moving forward. But right now, the first one to get it to the T and exact is 64.97. Super, super important to watch. This is already descending. It looks like the bulls are reappearing, but it's important to watch this closely. Now, again, the 50-day moving average is 70 cents. So I want every single investor to be aware that the most important resistance level here is up here at 72 cents to reach newer highs and new resistance levels beyond the 50-day moving average and get deeper into bullish territory to then reach up here at 76 and then 78 and so forth. But before getting to any of those numbers, the first resistance level that needs to be broken through is 68.01 to be exact. I'd round that down to 68 cents. And it's super important to break through this, but not as important as 72 cents because 72 cents is the first resistance level in bullish territory. And the bulls have crossed the 50-day moving average. And by turning that into a support and crossing it and moving further away from it to newer highs and new resistance levels, they'll gain leverage. Now, this one is important because this is the beginning catalyst to start moving upwards and continuing this momentum that has started. But it does not confirm or guarantee that the bulls are going to cross the 50-day moving average or get back into bullish territory. So I want every single investor to be aware of that. But it is just as important, but not the most important. Not as important as 72 cents. So 68 cents is the beginning catalyst. Doesn't guarantee that they're going to cross the 50-day moving average, but it is the beginning catalyst as I've stated. And I want to emphasize that for this to start moving upwards. And it's an indicator for us investors to know that this is starting to work its way up closer to the 50-day moving average. And every resistance level up towards the 50-day moving average is one step closer for the bulls to get back into bullish territory. As always, if you found this video helpful and informative and you're a first-time viewer and you feel inclined to subscribe, please do so. Don't forget to click on the bell to turn on all notifications for all the first-time viewers and investors inclined to subscribe. Now, if you are subscribed, double check if you've clicked on the bell. By clicking on the bell, you won't miss a single video that I post. And don't forget, guys, to share this with your friends and community. Don't forget to hit the like button to let me know you watched this video. And thank you guys so much for watching. So, for those of you that have stayed to this point in the video, the ticker symbol you want to add to your watch list is LXRX. Like I stated earlier, we've talked about WBA, ALGM, and those stocks are definitely stocks that you want to keep on your watch list, do your due diligence, and once you make a rational decision, they're stocks that you can go ahead and play with for a couple weeks, couple months, maybe even a year, because their catalyst and their momentum is over time. Now, the one I'm about to share with you guys that I just did and explain to you guys is LXRX, and this is a speculative play. This is one that either you just want to watch on the sidelines and just watch how it behaves. And if you're an experienced investor, do your due diligence and do your research because it's been consolidating leading up to this point. It's been working its way up. It's been consolidating this week. And there's a lot of hype going into Thursday for this stock to actually have a bounce, right? It's going to have some momentum and a catalyst due to the fact that there's a big event going on Thursday. According to how positive and how well that goes, I believe that there's going to be an opportunity for this one to move. Now, that's for an experienced investor that wants to do their due diligence and research. I'm not here to tell you guys to buy, sell, or hold. I'm just here to enlighten you guys. Once again, that stock is LXRX. It's a very speculative play to watch moving into the end of this week, starting next week. But if you don't feel comfortable, definitely you can go ahead and paper trade it to learn about the behavior of how that stock moved. And also, you can just watch it from the sidelines. But the reason why I share all types of different stocks with you guys is because I want you guys to learn about all types of stocks. Stocks that move because of news, because of an event, because of dividends, because of revenue. I'm here to discuss and share and enlighten you guys on all types of different stocks, because not one single chart is the same, not one single market capitalization is the same, and not one single stock is going to be approached the same. So I hope you guys learned something from adding this to your watch list. Once again, this is something to add to your watch list moving into the end of this week, moving into the beginning of next week. It could have more potential in the future, but as of right now, it's a speculative play that I'm sharing with you guys, and it's something to watch as the week ends, according to all the hype and great news of the opportunity at this event going to happen this Thursday. Thank you guys once again for watching, and let's make some money.